Hey guys, what's up? This is Tony from alphapursuits.com. In this video, we're going to talk about VIX indicators and XPX technical analysis to see which way the market will move in the coming weeks. Stay tuned. This information is for informational purposes only. Please do your own due diligence before placing any trades. So I have been tracking the percentile rank of VIX in relation to VVIX, VIX 90, VIX 3M, VIX 6M. In case if you're not familiar with these terms, VVIX is volatility of volatility. So it's volatility of VIX. VIX 90 is the 9 days forward-looking volatility measurement. VIX 3M is 3 months, VIX 6M is 6 months, and VIX is 30 days. So by looking at this relationship, we can see VIX 90, interesting enough, VIX 90 has been declining this past week. And this is sort of understandable considering we have a July 4th holiday. So it was going to be a long weekend. So the market sort of expected that. Probably that's the reason why it had been declining last week, especially on Friday. You can see it dropped down to 36%. And the percentile rank is calculated based on 1 year data point. So, it includes all the seasonality, whatnot consideration. So within the last year, essentially this value is telling us it was ranked at 36th percentile. So it was pretty low, towards the low end. Whereas all the other ones, they are still pretty high. As you can see, VVIX against VIX is still close to 100%. It's pretty high. That ratio is pretty high. And 3M and 6M, they did decline a little bit here, down to 79 and 76%. Now, I also look at percentile rank of VIX itself, VVIX itself, VIX 90 itself. So again, VIX 90 is showing there's a slight decline. And interesting enough, VVIX has been pretty low for quite some time now. And let me show you why I track this. So there is a very good example using Omicron news. And as you can see right here, Omicron news came out, it was on Thanksgiving night, and obviously the next day, as you can see, it jumped up. Everything went up substantially on 26th of November. Now, when you look at this relationship, percentile rank against VIX, against these VIX indicators, you can see VIX 90 was already jumping up quite a bit, 36%, VIX 3M up to 51%. And this is few days before that news came out. So obviously they already knew something was going on. So somebody was already hedging it. And this is why it's very a good idea to understand and track all this number to see most likely which way the market is going to go. And obviously it's not as clear cut most of the time. So based on this data right here, it's kind of difficult to say, okay, which way it's going to move next. And it's a good idea to look at this in combination with other data as well. And what I do normally is I look at technical analysis of SPX to kind of get a sense of what's going on there, and combining this data with this and also other various data out there, for example, market internals, to kind of gauge and see most likely which way the market is going to move next. So looking at this, as we can see, there are two large gap down here, and one of the gap was filled by this uptrend that happened last week. Well, actually 2 weeks ago. So for the last couple of weeks, there was a bit of uptrend, and last week it actually came back down here. So it broke this small uptrend line here, and there was a small gap, and this was filled this week essentially. And there is this sort of a shorter trend of downtrend here. We almost broke up that trend, but then we came back down here. And then this is the 25 days moving average, 50 days, and then 200 days. So we also broke that 25 days. So it was a little exciting that day, but then it just came back down. So obviously we are still in the downtrend. And then looking at this major downtrend line from the top all the way down, clearly we're still way below that line. So we are definitely in the downtrend still. Now we are moving sort of sideways here. So again, looking at this, it's kind of difficult to tell which way it is going right away. But one thing we can be sure to watch out for is once it gets to this minor downtrend, whether it's gonna break up or down. And then once it breaks up to that, then whether it's gonna cross this 25 days moving average or not. So that's something we will be looking at in the coming days. Obviously, you can see it's gonna go close to that downtrend pretty soon, unless it keeps declining and moving parallel to the downtrend. That we should see some action right here. And also, this is the gap that I'm looking for to waiting for the market to feel that gap. So what I'm thinking here is if it breaks this up downtrend and then cross this 25 days, most likely the next that it's gonna get stuck at is this 50 days moving average, which kind of is close to where this gap is. So if it does break up, if it breaks that downtrend, it probably will keep moving up, feel that gap, hit the moving average 50, and then we'll see what happens next. So there's definitely, probably most likely, I should say, because nothing is certain, that the market will likely move up if we do break that. So it'll be interesting to see. And looking at the event calendars, in the next couple of weeks, there aren't that many major events. So looking at the timing as well, the market could move up. And then once we get closer to those events, which comes in later in July, there's some CPI inflation related, and also Fed meeting, this and that. So it'll be very interesting to see what happens then. But as of now, my personal bias is probably it will move up a little bit in the coming days, if not weeks. So that's it for this video. If you like this video, please give it a thumb up, subscribe, and I'll see you in the next one.